What's happening, people? So it's DJD FOREX here again. I just wanted to do a breakdown of today's move. I literally watched this on my phone and I thought, wow, that was a pretty clean setup. Um, I specifically wanted to concentrate on something that really helped me in my trading, which was basically something that allowed me to take less trades and basically stay out of the market when it was consolidating. So in today's breakdown, although I didn't take this trade, I literally noticed something that basically helped me a lot with my trading, which was basically learning how to basically determine whether the move is over or there's still draws on liquidity that basically keep the move in check or keep the move in play. Um, Today is a good example of two strong draws on liquidity getting taken out, which basically signified that the move was over. Um, I'm going to basically break down what I'm talking about, but just quickly, can you see all this, right? This is the type of stuff that literally used to get me. I would be coming home late from work, trying to jump on the charts, coming to the market, trying to find a setup just because I wanted to trade, I wanted to catch something, right? And I didn't really have a system that determined whether the move was over or not until I really started concentrating on draws on liquidity. So in today's video, I really want to like preach the lesson of if your draws on liquidity have been taken out, you need to stay out of the market because the move is done. Um, this is just chop. This is just going to fuck you up. Like I definitely have blown accounts in chop by hitting it one way, getting the sweep, going the other way, sweeping, coming back, and just really just not really even understanding what's going on. And to be honest with you, you can see that basically price in this scenario has pushed right up and come back. I mean, even this move here, this secondary move is dog shit because two strong draws on liquidity were taken out, which was this London high here and this dotted red line, which was literally one of the strongest draws on liquidity, which was last previous week's point of control. So literally, when I saw that price was heading into this like aggressively pre-market and then kind of just was here, when the market opened and I saw the sweep, I thought, oh my gosh, that is literally like a textbook. And then I already had this high marked out um, from just being on my phone. And I just thought, because I marked out the highs, London high. Um, and I literally just thought that was such an easy play. But where is December and we're still in the holiday season? I've just been staying out of the market, plus I'm working full time. So it's just for me, I'm just watching these plays and thinking that December should kind of be trash price action, but it's actually been giving quite clean setups. It actually always does, to be honest with you. But those days that you do enter the market and you get a consolidation day is like the reason why you then would say, oh, December's rubbish. But to be honest with you, I've just been seeing clean bangers majority of December. So I don't know. It depends. If you're talking about this, yeah, then yeah, that's trash. That's bullshit. But if you're talking about this play and this push here, that was very easy to predict. That was well, not predict, but you know, that was a quite an easy read with a quite a strong reason for it to go up there, and also um, quite a strong drawdown here. So what I'm going to do is I'm going to try and keep this one short and sweet because the last videos have been going on for like 50 minutes to an hour. Um, Let me just move myself down here. But all it is, I just get really into explaining the things how I see them and how I can maybe help other people see them. So I'm going to quickly just jump on the higher time frame, right? And I'm going to just quickly jump onto the 4 hour. Oops. Actually, do you know what? Let's quickly go to the daily, right? I'm not gonna do a proper top-down analysis, but just a couple of things to observe, right? We have this bullish fair value gap, right? We're trading above a bullish fair value gap, right? So this has been pretty bullish. We see some kind of pullback here. When you go into the smaller time frames, you start to get a little bit more of a clearer picture of what's going on. We do have, so this was 2 weeks ago. So this was Where are we? We do have some strong draws down here. So we do, we possibly could come lower or even find support here. But in this example, it was quite a clean BME cycle and it was quite a clean block. So just quickly, I'm going to show you what I mean when I say previous week point of control for a draw of liquidity. Go to the hourly. All right. And also it's a Monday as well. So I kind of just tried to stay out of the market on a Monday. Right. Just going to cut this. Right. So if we just look at last week's price action, right? This is all of last week's price action. Right? When you put your fixed range volume profile tool from the beginning of the week to the end of the week, right? We have the point of control, which is here. So this is why I sometimes put a dotted red line. So basically price is kind of striving to get back to this area, right? You normally see that if price takes this out, it's normally the low of the week, right? So it's quite a good draw. It's something that I definitely use to trade towards. And also another thing is I will throw my tool from the low to the high to give me the equilibrium of the previous week. So this blue line is the equilibrium, and this red line is the point of control. So we have some strong draws towards the downside. All right. Now, okay, so let's get rid of our replay tool. Cool. So just looking at what happened in the pre-session. So price has come down, taken out this Asia low here, right? So it has a reason to come down. We've also got the 50% of this mitigation zone here, which I've already drawn on here, but I'll explain why maybe this is the mitigation zone. I did do a breakdown, I think, of this day. It's quite a clean day. But basically, I'll just go on a 15 minute to give us some more detail. All right. So I don't know if you saw the other video where I did a breakdown about this being a very clean play, but it's the same thing. So we had a previous day's low as liquidity that got swept and then price pushed above a broke structure, right? So technically, we can draw our tool from top to bottom, which gives us our mitigation zone. Now, the fact that we broke structure here and came back in means that you kind of need to drag it along because this now becomes your protected low over here, right? Because we did get quite a deep retracement into that. So that's pretty much, that whole push up has been balanced and mitigated. So technically you could move this there, right? Now, I'm just trying to paint the picture of why we had strong draws towards the downside and why we basically could potentially see a move back up towards the upside. But after this break of structure, we got this little pullback here, which didn't quite come into anywhere. So we still have a very big unmitigated area here. So we're literally stacking confluences, right? So if we draw a line here, I mean, the sell into this would have been a solid, play. But look, it was in the Asian session and it was just a bit, I'm not getting involved in that. So yeah, this kind of does explain what I mean by a draw. So when I say a draw liquidity, I mean a reason for price to go towards it because there are definitely orders underneath this. Even the 50% of the previous week, point of control here. You've also got equilibrium. So price was definitely drawn to this area. Okay, cool. I'm just painting the picture for the BME cycle, right? So we go from here to here, break, little pullback, come up, chop around. None of this got swept, right? So this has still got resting orders underneath. You got somewhat of a little play here. I'm not going to go into too much detail on this, but this is all, pretty much, I would say, out of hours because this was Christmas Eve, which, I mean, you did get a bit of a push here. And then you've got all of this nonsense here, which was on Boxing Day, I believe. So really, to be honest with you, I mean, people were still trading, believe it or not, but I was out of the market. But yeah, so just looking at what we got here, we don't really have like a strong balance into here. I mean, this could have been the balance, push up, sweep, and then basically we're supposed to have faith that we're going to extend, right? So that's our BME cycle. So I'm just going to draw again what our BME cycle looks like. This is us. So it sweeps this back into the 50% of this range and then out, right? So that's your mitigation zone. There's your liquidity, right? That you sweep. And then you're just looking for an entry drill around this area, right? Or near that area. And we did get a really, really, really solid entry drill here with some good targets up top. And, you know, a lot of liquidity was taken out as price came down. So you had the Asia low here, which was unmitigated. You had the equilibrium of the previous week. You had the point of control down here, and you also had the liquidity created here. So you had confluence for price to come down here, but also think about all the orders that were taken out when it did come down here and manipulate into this, hit the 50%, create our entry drill and push out of there. So I'll break that down as well. Just gonna clear this. All right. I guess we just leave that there. So, right, let's look at what happened here. So something I've been doing a lot recently is marking out the highs and lows of the previous session. Bang. So this is literally London high. London high, right? There's liquidity around there. Even though there was a bit of a sweep here, but that's the high of the session. What else did we have? So this was our reason to go up. So let's get into the 5 min. I'm going to basically clear all of this because I'm going to retrade it and show you exactly what I saw. Okay. Yes. Right. So the takeaway from this is understanding when the move is done. That's the main message I'm trying to get across with this video, right? Is I want to show you something that changed my trading. Is because I used to come to the market after maybe like rushing home while I'm working or doing something, rushing home, seeing all of this, and then thinking, oh, I can get a secondary move, and then basically getting into something like even this push here for the buy to go up, when really the move was that at the open. And I'd be here trying to take this and taking it up and then hoping to take out that high and then comes back and consolidate and then wick me out. And do you know what I mean? You're like, look at that. That's just nonsense. So when I started to put the draws on liquidity on my chart and see what happens after the main draws get taken out, then I started to realize that was one of the mistakes I was making when I was trading. All right, cool. So let's just quickly go on the 5 min. All right, so let's just quickly recap, right? So price has reason to come to this area and it has aggressively come into here, right? So once we've taken out all of this liquidity, we've literally got 1, 2, 3, 4 draws on liquidity, right? It's hit into this area. It's safe to say we've mitigated, right? We've mitigated this area. Now we're just looking for our entry drill, which again is a BME cycle. So I'm just going to draw it. Right? So market opens here. Right at 9:30. Gonna draw this in orange. and it just like gave us the most textbook play again. But I say textbook play again, but it's just because I can read the price action, right? So let's look at what happened. Okay, so price has come into this area and made a low, right? Now at this point, we don't know if that's the bottom. Okay, it's made a low, it's pushed back up, and then it shot down and swept this low, right? So we can see that it's a sweep, right? That's why we have liquidity there. Now, this could have kept going. So this could have just done this, right? This could have swept this, could have gone back up, and it could have gone again, right? But we don't signify the beginning of the BME cycle until we get a break of structure after a sweep. So that's what's important. That's how we know the beginning of the cycle is happening, right? So the fact that this put in a low, this swept it, and then we broke structure after was basically a telltale sign that basically that was the sweep, right? So once we get a break of structure of here, tap back in, you're literally just looking for an entry. Now, when we look at the price action, let me just move this for now. Actually, I'll get rid of it. I think we will catch the gist that that's the open. Okay. But this is what's important, right? So the fact that we broke structure after a sweep tells us that we're going up, okay? So that basically means that that was the sweep. Now, based on our BME model, so I put liquidity underneath there, but that's probably, if you look, I mean, I don't want to go into the 15-second chart again. I did it yesterday, but you do have a little bit of like this, none of this swept anything. I mean, this candle did give this one a little sweep, but you have a little bit of built up liquidity here because of these candles, right? But so you kind of had a reason for price to sweep all of this and then hit into this block. We might need to go into the 15-second chart just to see this, but this here is a block, or this is potentially on a smaller time frame, a mitigation zone that got its touch while this got swept. Now, another thing to take note of is we had this fair value gap that basically got invalidated. All right. So the fact that basically price not only created a fair value gap here, so our entry drill is the same structure as our basically way of determining the direction and where we are in the move. The fact that we came down here, swept this, and then inversed out of here, then went on to break structure, came in, swept that, took that out. But basically, because we didn't get a candle closure below it, these two wicks into it were basically means that it held, right? Which obviously, if you were in this, you would have been freaking out a little bit. But if you actually just look at what we've got, like what's happening here, I might just jump on the 15-second just to show you this block, because there was also a sweep of this candle here, which would have created a block. So, I mean, from there to there is a block. I'm going to just go on the 15-second just to find it. All right. So, yeah, just looking here, you can see the last push down before a break of structure, right? Create some liquidity, push, break structure, and come all the way down, sweep. And we've hit the 50% of this push down, right? So we're literally repeating and rhyming our play over and over again on the smaller time frames for our entry drill and for our way of determining the direction, while we've mitigated an area of interest, right? So the fact that this has come down here, taken this out, and then basically shot back out of there. I mean, you could have, I mean, sometimes I do jump on the 15-second chart, right? But the fact that we've basically closed above that, respecting now bullish order flow, right? Basically gives me the signal that we've changed direction. Price is satisfied, she's happy, and she wants to move. Also, just to take note of the fact that order flow is now being respected and we're leaving, right? So the fact that we broke structure first, come back in, swept, and then left. I mean, this is a textbook BME structure with all the things that we need to see for us to know it's going to hold. Now, what we also need to do is make sure we have a reason for price to go up there. So the fact that we had all of these strong draws on liquidity at the bottom is definitely a reason for price to come into here. But what's our target up top? So the fact that we got the London high, which has all the stop losses from the London session resting above. I mean, this was pretty bearish structure coming down. We got sweeps and then pushes, push back up. So we did have some more liquidity targets, I guess. But you know what it is? I didn't want to get too chopped up in this structure. I can see here, but I'll be honest with you, the fact that we've come into that, I mean, arguably you've got all different sweeps here. I mean, you could argue that this sweep and then this dump here, this was the most recent BME cycle that should have gone up and then dumped down, right? But the fact that we blew straight through that kind of invalidated this. It does give us a bullish bias if we see the last bearish BME cycle being invalidated. But I think because of how price was moving down here, all not really in the session that we're trading, I just wouldn't get too involved in trying to take a play off of any of these structure points, to be honest with you. I mean, the structure points down at the bottom during session were heavy confluence for a buy. So yeah, like I said, this would have been the BME cycle. So back up here into the mitigation and then extend down. So that would have been a bearish BME cycle to go down, right? But the fact that we completely violated that and then came back into this to create, you know, the play here. Well, actually, this secondary play here. But to be honest, like I said, what I'm trying to do is just share something that really changed my trading is that once this got taken out, right, you now stop trading. It stops. So literally, you just cut the amount of trades you're taking. So literally, this is your window. Here we go. So the orange line is the market open. The draws on liquidity are gone. So when the draws on liquidity are gone, you have no context for your move. This got taken out, this got taken out. You just traded into this from this. It's as simple as that. So when this happens, you just stop, it's done. I mean, you could have taken sells. There is some play. I mean, some people may have argued that, you know, after taking this, you could have took the sell off of this inverse, sorry, not inverse, this fair value gap here, or even off this block, maybe down to there. But for me, I think the strongest move based on my strategy is literally price has come into a really heavy area of interest with a lot of confluence on a reversal. And then it's given you literally a textbook pattern and shot straight to this London high, bang, taking out all of that. So yeah, I don't know. Like you could have. I mean, looking on a higher time frame, I did mention, you know, we haven't really mitigated this daily fair value gap. So yes, we could come lower to here, and we do have the points of control from this week here. Don't think that line is in the right place, you know. I'll fix that. But basically, what I'm trying to say is, yes, we do have lower targets because we do need to rebalance this whole push. So from there to the top, we do need to rebalance this push. We do have areas underneath here. We do have reason for price to come down here. But we were finding support on this new week opening gap from the previous week. And we did get a good push off of there. So, I mean, yes, I mean, we could be coming down, That was a solid bounce play if we are. But I would say that we're still bullish until we break this structure here. So for me, bit of a no-brainer. I just watch these setups and I just think there's so much to learn from them. And I just obviously sit there just like marking charts up myself. And I just thought, you know what, if I can like share what I see, it might just be that one piece that helps someone. Do you know what I mean? Because I mean, I've literally just grinded this out for like 3.5 years to just be able to see this stuff and like understand it. But yeah, I mean, like I said, this is my textbook understanding of how the market works. Push up there, balance. Oh, sorry, hold on. Nope. Sorry. It's more refined than that. Way more refined than that. It's here. Sweep, break. I mean, mitigate and then push out of there. Thing is, when the balance, when price pushes straight in like this, if it completely mitigates, it might not get, it basically mitigates and balances at the same time. So takes you to there. So although our BME cycle requires another step, the characteristics or the common, I don't know, the common parts of the BME cycle that we need is liquidity. So the fact that price has broken out of there, come back in and swept that, it's kind of done that in one step. Whereas actually, if we go to the smaller time frame, I will jump on the 15-second chart one more time. I don't like doing it. It just gets a bit messy, right? I mean, if you looked at this as the push down, we can draw something that fits a bit more into our model. So we could say, you know, like, let's just go from, I'd say go from there to there to there. You're engineering liquidity basically, and you break structure, you sweep the liquidity and then you leave. All right. So that's, you know, that's a bit more closer to the model that we speak about when we talk about BME cycle. But it's the characteristics are the same. You break structure, you create liquidity, you keep going and you come sweep and then extend out. So yeah, it's the same thing. Price will create fuel to come back for and then push out. And then that's why you get these massive pushes like that. So yeah. And that's it. I want to try and keep it a bit shorter because I don't want to lose people's concentration. But I just feel like there's so much to learn from the things I see. But the main takeaway is once your draws of liquidity have been taken out, just come off the charts. Like I actually like could have traded this today, but this had already happened. So I was actually looking at this. I was looking at potentially taking this. So when price came into here, I was arguing that that's my sweep. Hold on, let me get rid of these lines. All right. I was arguing with myself that that's the sweep. We've swept that, or potentially, you know, this is a bit of liquidity that we could say we've swept, impulsive moves, swept that and shot out of there. And yes, it did give a fair value gap. It did, right? So you could have taken your trade like this, right? I did see a few of my guys on Instagram take this and take it up to maybe this block, whatever. But the draw's gone. That was the strongest draw, unmitigated draw, and it's in a very strong draw. So it's literally gone from draw to draw. That's why you got that push because it just went straight to there and literally took it out and then came down. So once you see the draws get taken out, you've just got to leave it alone. So yeah, because I literally like journal a lot and sometimes I get really frustrated because I'll have like a 2-3 week win streak where I'm seeing the market perfectly, I'm trading perfectly, I've got screenshots of like my journals, you know, my top step accounts, my trade sellers, and I'll just see like 2 3 week win streaks, and then there'll just be a day when I get caught up in this, and I will literally blow my account because of this. Of course, look, that has just swept that to impulsive move down, but didn't really work, did it? It went back up, came down here, swept this. Like, what the hell was going on? You can't trade this because the draw was taken out and price has already pushed into this draw. So what has price got to go for? Do you know what I mean? So this is something that really helped me, and I just thought I wanted to share it. Obviously, I didn't trade this today, but I just wanted to point out that, you know, you're going to see your pattern. You know, I could find a reason to take that sell. I could find a reason to take this sell here, right? I could find my pattern. It's there. I can see it. But you just got to think like, so you got break, liquidity up here and shoot down. But did it keep going? Like, did it go down there? No, it didn't. It just messed around here and then just went up there. So like, yeah, like you can find your BME cycle everywhere, but how do you know which one's going to work and what way it's going to go? Your draws on liquidity. So your untapped, unmitigated areas. So clearly, this was a good one. Yeah, I mean, literally, I'm waiting till January before I get back on the charts. I'm just not going to mess around. I managed to basically hold on to my account for the whole of December. I literally got 2 trading days in the beginning of December, and then 1 trading day towards the end. And I took 2 losses on my last trading day. So I'm basic break even on my 500k top step stacked combines. But to be honest with you, if I miss the move and I stay out the market, that's a win. So I felt like December was a win for me because I was just working, I was on holiday. So for me, you know, as long as I hold the account, I don't blow the account, that's a win. But you know, you give me like a week of beautiful price action on my trading days. If I see my model, I'm going to win. I'm going to take money out of the market. So yeah, this is it from me, guys. But again, just something I want you to do is just leave it alone. Like what I'm drawing here. After this was taken out, leave it alone. Draw it in red. Be honest with yourself. If the draw on liquidities, if the draw on liquidity has been taken out, both sides, you don't have fuel for a swing. You don't have it. It's gone. Yeah. So after this red line, you leave it alone. Because this was just dog crap. Do you know what I mean? That was the explosive move because of this price pushing into this, getting the fuel to leave it and come up for that. So, and that was all because of all the liquidity it took out. So yeah, all right, guys, I'm gonna wrap it up. And that's it from me. So if you like this video, please subscribe. If this helped you, if this may have been something that you know, maybe wasn't taken as seriously, when I started taking this seriously, I just ended up taking less trades, shitty trades. And I'll always look at the market and see what happened. Sometimes I re-enter and I get clapped and I'd take 2 losses or even blow an account. And then you look at it and you think, I was trying to trade in chop. Like nobody's going to win in chop. None of us can trade chop. Okay, so because chop is just doesn't have a direction. It's sweeping one side, sweeping another side, sweeping another side. And I literally have blown so many accounts trying to trade chop. Just be honest with yourself. If the move has already happened, the move has already happened. You just got to leave it alone. So yeah, again, that's it from me, guys. Just the main takeaway is just be honest with yourself. If the draws have been taken out, it's over. And sometimes it happens pre-market. So I leave it. Sweet.